So my dear friends, I dispense with this good morning, good evening. So let me henceforth address you as happy day. So happy day friends. Let's now continue with this chapter insurance claims. This is lecture number 3 for accounting, new recording. My dear friends, let us, as usually I told you, at the beginning of every session of ours, we will be having a recap exercise. Repeating two things. One is recap is not a formality. I do it because that will provide a smooth or nice warm up for smooth takeoff to the topics that we will discuss. Number two is it effectively register when we do recap exercise, and it shouldn't be like one way, it has to be like two way. Wherever you are, however you are listening, please open your mouth, spell out. Maybe the entire thing you can along with me repeat, or maybe wherever I give the blank, I want you to fill in that particular blank. So that is how effectively the class will be. So anyway, proceeding further, my dear friends, the first lecture recap is like, blah blah blah, introduction, etc. CA, super, horns are there, like that we discussed, my dear friends. Then we discussed about the paper, the hours, how we will do all this blah 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 things. We started with the chapter called insurance claims. Under insurance claims, an ocean, bottle of water, definition of insurance, different types of insurance. And finally, we zeroed in onto what we learned in this chapter, what is there in our syllabus. Learning objective, it is computation, determination, assessment of claim for loss of stock and loss of profit in a fire insurance policy from the viewpoint of insured. I told you, the claim has to be made by the person affected by that accident, and that will be verified later on by the insurance company. So what and all the normal principles applicable for computation of such claim is what we started to learn. So we started our discussion with the computation of claim for loss of stock. I told you, imagine, visualize, no. So in a business, stock was destroyed by fire. We need to tell this is the stock we have lost. So for that, we have to demonstrate, we have to prove how much stock we had on the date of fire. And we have concluded, after several discussions, we have concluded, let's prepare a simple trading account. Let's try to find out what was the stock I had at the beginning of this year. Let's try to find out what was the total purchases. So naturally, I should be knowing this is the stock I should have had. Opening plus purchases should be the total stock. From this, also identify what was the cost price of the goods which I have actually sold. Balance should have been with me. So the total goods, which is nothing but opening stock and the purchases. From that, whatever I have already sent out of this business entity, balance should be there with me. It is not there, I have lost it by fire. That is how a simple common sense approach. So it's not like debit side, credit side, profit, blah 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 things. It is simple common sense, like opening stock. Once again, purchases, total goods available with me. Whatever goods have already gone out, try to find out that. So balance goods should have been with me. That is how we call this balancing figure. So this in a T-shaped account, my dear friends, it is opening stock, purchases. We actually require in the credit side or the deduction part the cost of goods sold. But we have sales which represent selling price, which includes cost and profit. So profit element you can deduct there or you can add here, and anyway effect will be same. So that way opening stock plus purchases, profit minus sales will give you the closing stock, which represent the stock that exists on the date of fire. Like that we told you a trading account concept. Or in your, sir, I am not good at accounts, or I don't have accounting background, still no problem. You can put it in a statement form. I told you it's a common sense. It's not left right accounts concept and all, like a blind approach, etc. It's not science, it's an art. It's common sense. More than art, I would say it's common sense. So proceeding further, my dear friends, so we need to determine these informations. So these information, if it is ready-made available, no problem. If you have accounting records, if all our accounting records has been destroyed, we will try to obtain this information from various sources, which I have already discussed to you. Now, in an academical sense, all this information will be given in the question. So, opening stock, purchases, and the sales information, all these things will be given. The gross profit margin also sometimes will be given, my dear friends. This gross profit margin sometimes may not be given. So then we may have to find out the gross profit margin. Sometimes the gross profit margin given, but we have to adjust for certain increase or decrease on the gross profit ratio. Why we should adjust price level changes, like that. So many things we discuss, my dear friends. So ultimately, a trading account will have estimated information, and thereby we call the trading account as memorandum trading account. So finally we understood that we find out stock on date of fire by preparing memorandum trading account, for which first we identify the GPR. So step 2 is this, and then we will find out loss of stock, and then we will find out the claim. This is how we zeroed on to 4 steps. Now the 4 steps elaborately, my dear friends. So still not over as a recap, no, not over, elaborated. Step number 1, GPR. So you have to respond. Step number 1, GPR. And as GPR will be given in the question. Search for GPR in the question. It's given, super. Take the GPR as it is. Sir, GPR given, sir, but last year GPR given, last year GPR given. So 2-3 years GPR given, sir. So what do? Take average GPR. Sir, GPRA not given, sir. What do, sir? Then there will be definitely information about the trading account of previous year. So prepare trading account of previous year, find out the gross profit, and then find out gross profit ratio. Now that point number 4 and 5, in step number 1, point number 4 and 5, what is that? When you prepare the trading account, if you find the trading account has some abnormal items, abnormal item means those items that cannot reflect the normal prices. Normal selling price, it is not reflected, normal cost price not reflected. So that is what we call as abnormal items. Then the effect of such abnormal items shall be eliminated. Like that we discussed, my dear friends. So how do I eliminate? Yet to be taught you, don't worry, but still remember like that one point is there. Then I also told you, once you determine GPR, it is GPR of previous year. We will assume that GPR of previous year is the GPR of current year, but there is a possibility that price level changes would have taken place. Then definitely GPR of previous year is not the GPR of current year. In that case, my dear friends, what we will do? We will adjust that particular GPR. How to make adjustment? I will discuss later. So that way, we discuss step number 1, GPR, and various issues relating to GPR computation. Go to step number 2 to find out what? Stock on the date of fire. Just before fire, how much stock I may have had, I would have had. So I will prepare a trading account. I told you it is called memorandum trading account. It is for a specific period. I told you the logic. Now what is the period? Beginning of the year in which fire occurred till the date of fire. Then exactly the closing stock will represent the stock on the date of fire. That is how we discuss, my dear friends. So thereby memorandum trading account, opening stock, purchase, sales, given in the question, GP, sales into GPR, as we computed in step number 1. We arrive dash as balancing figure, closing stock as balancing figure, which represent what? What is the closing stock? Stock on the date of fire. Like that, simple as step 2 over. Now come to step 3. Step 3. It's very simple. I told you what will you do during fire? Either put off the fire or try to save stock. So some stock would have been saved. We call it as dash value, salvage value, saved stock. Okay. So in that case, my dear friends, what we will take is that, so this is a stock I should have had or I would have had on the date of fire. But after fire, I have saved this stock. Balance only you have lost. Again, common sense. So thereby stock on the date of fire minus salvage value. But there is a possibility the saved stock, though it is saved, but a part you would have given to insurance company, which means you want money for that also. Not only you require money for the goods destroyed by fire, you saved stock now, it means you can realize from outsiders, but due to some reasons or factors, you gave a part of the stock or maybe sometimes full stock to the insurance company now, then it is not actually part of savings. It is not part of savings, which means that has been also lost by you, correct? You have spent money for goods of 3 lakhs. That saved 50,000, which means you lost only 250. You lost only 250, saved 50. But in the 50, 10,000 given to insurance company, which means I lost 250, due to fire, and I lost the 10,000 also because I gave to insurance company, which means totally I lost how much now? 240 illa. 260 because 3 lakhs it was there. Now you have, after fire, after the insurance taking stock, what is there with you? 40,000 I have. That is called salvage value retained. So 3 lakhs you had, saved 50. Insurance company took away 10,000. But what you have still? What is the stock that you retain? 40,000. About 3 lakhs, you have only 40,000 na, which means you lost how much? 2,60,000. The 2,60,000 consists of two components, and you should be knowing. What are the two components? 2,50,000 which was actually destroyed by fire, and 10,000 that was taken by the insurance company. So there is no need for adding that 10,000 again. So like that we have explained in a very detailed manner. Maybe you find that, sir, I want to add 10,000, sir, I want money for 10,000. So then what you will do, you find stock destroyed by fire, 250 plus 10,000. That way you can take it as 2,60,000. I hope you are following this. Instead of two steps, I use one wording called salvage value retained. Salvage value retained now, whatever I still have after the insurance company took away. Understood? Like that we discussed about step 3, my dear friends. Then we discussed about step number 4, computation of claim. Sir, thalaye sutthudu sir, head rotating. So my dear friends, see this particular claim computation, it's very simple only, my dear friends. Generally, understand the general rule that we want to compensate you only the actual loss suffered subject to the maximum coverage of that policy. That's all. This is the basic principle. Fundamental principle what? You lost 1 lakh na, we'll give 1 lakh. You lost 150 na, we'll give you 150. You lost 2 lakhs na, we'll give you 2 lakhs. You lost 250 na, we give you 250. Actual loss na, we need to compensate. That is called the concept of insurance indemnifying the loss na, making good the actual loss suffered. But subject to overall coverage, each person may have different coverage. Appo you covered only for 2,40,000 and you lost 250 na, how much I will give you? I can give you only 2,40,000. So you covered for 240 you lost 2 lakhs na, how much I will give you? 2 lakhs na. But you lost 250 na, how much I will give you? 2,40,000 because the coverage is 2,40,000. It's the fundamental principle. Now in this principle, if the policy also mentioned that we will apply average clause also, we discourage under insurance. Like that, the primary objective is to discourage the under insurance. Like that, average clause concept is mentioned na, then just because of it is mentioned, it is not applicable. There should be proper under insurance. So if there is over insurance now, again that will not become applicable. So finally what we told now, you need to understand whether the stock loss is complete loss or partial loss. You might be asking, sir, if it is complete loss, why you are not speaking about this average clause? So we understand like this, my dear friends, even though you have average clause, something is mentioned in the agreement, but when the complete goods are destroyed, then by applying average clause, without applying average clause, answer will remains the same. The number, the final number what you get will remains the same. If the goods are completely destroyed, then there is no separate savings and all you will be having. Whatever I had fully destroyed. So whatever I saved, there is no savings only. I hope you are following. So thereby, goods completely destroyed. There is no need for even looking into the policy whether average clause is mentioned or not. Straight away apply one principle. Complete loss, straight away one principle. What principle? Policy amount or the stock on date of fire, which is actually the loss. Because complete loss, stock on date of fire, the loss. You can use any interchangeable words. Stock on date of fire, loss of stock. Sir, can you use this words? Okay, because both are representing the same. That is what we call as complete loss, you know. Correct. So, whichever is less will be the claim. Sir, partial loss. Partial loss, check whether the agreement provides mentions about average clause. It is mentioned, sir. Just because of it is mentioned, immediately don't apply the formula and all. Now check one more point. What is the one more point? Is it underinsured? So how do I know it is underinsured? Policy amount less than the loss of stock. No, policy amount less than the stock on date of fire. Like that, if you see the situation, then apply this formula. What is that formula? Proportion. Loss proportion we are compensating. What proportion? What is the common sense? Total risk that you should have given to insurance company. In that, whatever risk you have given to insurance company. What is that? Total stock on the date of fire is the policy you should have taken. But you are not taken that. Your policy is less than that. No, that is a proportion in which insurance company will settle you the loss. It's a simple common sense. So loss of stock into policy amount divided by stock on date of 5 years. Stock was 5 lakhs. You took policy for 4 lakhs. Now, upon the proportion, you will be compensated the loss also. I hope you are understanding. This is called application of average clause. About 3 conditions should be applied for applying average clause. What are 3 conditions? First, it is dash loss, partial loss. Insurance agreement, there is mentioning about average clause, and there is also dash underinsured. Correct? First point you should verify whether it is complete loss or partial loss. Second point, no, you need not dig from the question only. If nothing is mentioned, it is always implied that the agreement contains average clause. Like that you will assume. The third point is under insurance are there or not. That you have to verify. I hope you are following this. Okay. Then we told you, my dear friends, sir, partial loss, sir. Partial loss. There is mentioning about average clause. There is mentioning about average clause, but it is not underinsured. It is not underinsured. In that case, straight away answer is the claim is equal to actual loss of stock. No, whichever is less and all, because anyway policy amount is higher only. When you say no underinsurance, now policy amount is higher. But straight away only one answer. What is that? Claim is equal to actual loss. There ends the matter. I hope you are following this. Then, my dear friends, we have the third scenario there. What is the third scenario? That, sir, it is partial loss. Yes, partial loss. There is no mentioning about the average clause. There is no mentioning about average clause. Then you need not check whether it is underinsured or overinsured. No mentioning about average clause. Very, very clearly told. No average clause in this policy. Like that it is given in the question. In that case, what I understand is that you straight away take it dash or dash, whichever is less. Like policy amount or the loss of stock, whichever is less. Like that, even though I wrote 4 different scenarios. But actually 2 scenarios now. Which are the 2 scenarios? If there is partial loss, average clause mentioned, and underinsurance, now apply average clause. Otherwise, for all the 3 situations, apply the loss, policy amount, whichever is less. If you apply directly, you will be getting the answer. I hope you are following. So thereby, even though like this 4 different situations as given in the theoretical form, I explained to you, but condensed version is this much only. Check the complete loss or partial loss. Partial loss, na second question you will ask. Is the average clause mentioned in the policy? That we will anyway assume. Now the third condition is that is it underinsured? That's all. So if yes, you will apply average clause. Otherwise, in all other circumstances, apply the simple principle of loss or policy amount, whichever is less. There ends the matter. Understood? So this is how we discuss this particular concept, my dear friends. Step 4 steps 1, 2, 3, 4. So this is the third lecture, and this is the third time we are doing the recap, and might be another 2 lectures required for the loss of stock. So we'll repeat every time. And maybe like no, this is the age. Sometimes you feel like no, sir, repeating boring. Why you repeating and all? I might be repeating for this like no 500th the time, taking several batches these many years. I am not getting bored, my dear friends. So you should definitely not, because this is the 6 months period you are repeating 4-5 times. That's all. So thereby you have to repeat. There is no boredom of hearing again, because the warm up is must, so that technically you can smoothly take off to the other one. So thereby, don't be irritated, show patience, show pakka patience. Maybe one problem straight away when you're not understanding, immediately don't close your mind, be there in the lecture, go with the faculty, don't get stuck up at one place. When you stuck up, no, simply switch off that particular video. Don't do it. Let the proceedings happen and you keep following it. Somewhere or there, the doubt that got into your mind will be unwinded. So show the patience, my dear friends. Sometimes it gets stuck up. In fact, something that you are not knowing at the age of 10, you may be understanding only at the age of 18. I am not telling anything differently, my dear friends. Don't visualize any bad things and all. So several doubts, that will be resolved at different points of time. I am not telling now this whatever you are not understanding now will be understood at the age of 60 and all. Maybe what you are not understanding at the 18th minute of lecture, you may understand at the 35th minute of lecture. So show the patience. Just proceed. Don't be biased. The moment, ayyo, puriyada marike not understanding, like that, don't get into such sort of feeling, my dear friends, because again I am telling you what I noticing from the generation change and the current generations who are very actually smart, techno savvy, because of this technological advancement, so much of impatience I could see. They are not ready to wait. Similarly, easily giving up attitude is happening. So they want success, that too ready-made. Success ready-made, that is not happening. So in the waiting period, I am panic. They immediately going into the panic mode, and see, everything will be cured, everything will be taken care of, for everything solution will come, provided you have the waiting period. So the waiting, the patience, if you can show, definitely everything will be automatically resolved. So life, problem, academics, whatever be the case, show the patience. Everything, when you are sincere, everything will naturally will happen. Okay, so now coming back to these issues, my dear friends. In the last class, step 3, step 4, different combinations we applied, and I actually after this lecture number 2, I asked you to solve the problem. Maybe you would have already completed the problem and then only you are watching this lecture number 3. So we have completed now. I mean, we have already taken 20 minutes for the recap alone. Sir, like this you will spend. I will slowly reduce. Maybe the previous lecture 30 minutes recap, not today 20 minutes. The next recap will be for 12 minutes in the next class. Slowly we'll reduce the recap and all, my dear friends. But still, until it gets a no. See, sometimes what happens in a recap exercise only. Why I am so particular with the recap now. Lecture 2. When I recap in lecture 3, some things what they have not actually understood or what doubts they had, that is getting resolved at the recap exercise, because recap is the whole lecture of 2.5 hours in 15 minutes. So when that is happening, so overall viewpoint, that particular doubt is getting resolved. So understood. So thereby very actively participate in the recap. Don't so recap exercise. So 20 minutes, let me run through the bar, move the bar and hear it directly from the new area onwards, like that. You don't sit. It's okay, just show the patience. Effectively participate in this recap exercise, my dear friends. A humble request. Proceeding. You spoke now. This is recap. So now let us now take up the new areas today. Today problems only. So you have actually done question number 2. So let me read this question number 2 and I will solve now. I hope everybody now have available, ready with the answer, because I will tell you the experience. Face to face, out of the 7 questions, straight away I gifted only. Most of the questions I discussed, I want the problems to be solved by the student only, and you have done, not merely calculator and all, you have done in pakka form. Now right from your learning stage onwards, my dear friends, do the fair work. Don't do in pencil. Sir asked me to write. So these things, something I vehemently I can oppose when you are there in the face-to-face lecture. Pencil which means you are having doubts. So a student who use pencil for solving means they are having absolute doubt about themselves. So fair, the first work should be fair work. Suppose there is mistake, strike off and do it again. So it is not that, no sir, my notebook should not have any scribblings, no scratched work, repeat work, etc. No, it should be there, because your notebook should definitely document the mistakes that you have committed. So every example, anything for that matter, my dear friends. Suppose something special you written, put a box and you write, that's all. You want to separate it from the regular notes, put a box. It is not part of regular notes, so like that you can put a box, but don't use pencil for writing. You are supposed to write only in pen. So you don't tell that I want to maintain this notebook for 10 years. Hardly 8 to 9 months only you have to maintain. That attitude you should be having, my dear friends. So a student, when they are initially solving, I am asking you to solve using pencil, means self-doubt. Every time. This is also another character that I notice with the students, slowly devolving, is that whatever I do mistake, complex, I don't know why. So maybe past I would have committed 99 times mistake, but the 100th time you believe, my dear friends, that your answer is going to be correct only. So that sort of attitude you should be having, my dear friends. So even if it is some mistakes, scratch that, put a wrong and then do it again. Let that be there in the fair note. Tomorrow when you revise, in the mistake I did that time, I will not repeat this mistake again. So that sort of things should be documented in your notebook, fair notebook. It's okay. So write legibly. This is the time to practice. I'm telling again and again. So there are some brilliant genius students who failed because of their writing attitude. Thereafter, 1 or 2 times they fail in the exam, then they will realize and they will come back for a good writing. So that shouldn't happen. When you are having the ability and when you are having that the capability to pass very easily, and just because of your sheer laziness you are failing now. Maybe you should consider this completely into online examination, then no problem. Otherwise, please have a very good attitude towards writing, good liking towards writing. So, see, you can't expect me to change my handwriting. So, my handwriting is horrible. The first 2-3 classes now you will feel like very horrible. 4th class it is not going to be improved. 4th class you will get accustomed to. So that is what I am telling you. So that is what happens in my classroom. So there is nothing that I can change now. You can also can't change, but you can write legibly, in the sense understandable form, in big letters, giving a lot of space, etc. Like that. Don't think about taking extra notebooks and all. Ruled notebook, start writing, etc. my dear friends. So let us now proceed. Question number 2. A fire occurred in the premises of Smoke Limited on 31st August 2020. From the following information, compute the claim for loss of stock. Sum insured is 1,50,000. Stock on 1st April 2019 is rupees 1,20,000, and stock on 31st March 2020 is rupees 1,60,000. Purchases and sales for the year 1920 is 7 lakhs and rupees 11 lakhs respectively. Purchase and sales for the period 1/4/2020 to 31st August 2020 is 3,65,000 and rupees 5 lakhs respectively. Salvage value is 15,000. The question is very clear that you need to compute the claim for loss of stock. So question number 2, step number 1, gross profit ratio. So you find that first of all, fire occurred on 31st August 2020, which is what year? 2021. What is the previous year? 1920. GPR given on Sina, no GPR given. But naturally, I will proceed for trading account of previous year. That is 1920. Trading account of 1920. I will prepare. I will find out gross profit, then gross profit ratio. Then I will proceed for memorandum trading account to find out stock on the date of fire by taking the 2021 information up to 31st August 2020, up to the date of fire. So I will get closing stock, which represents stock on date of fire, deduct salvage value, you get loss of stock. Then you have to check. Now salvage value is there in this problem, so straight away you understand this partial loss, and straight away you will understand that there is mentioning about average clause. Sir, where it is given average clause? Nowhere it is given, but it is always implied that in the policy the average clause is mentioned. Then I want to check whether it is the only thing I want to check is after this partial loss, I want to check whether it is underinsured or not. So accordingly, I will compare the stock with policy amount, and if it is underinsured, we'll apply the average clause formula and we'll get the claim. Anyway, all this discussion putting into writing. Question number 2. My dear friends, question number 2, step number 1, gross profit ratio. We prepare. (2019-20) trading account for the year 1920. We have opening stock. Should take the information. Opening stock on 1/4/1920 opening stock 1,20,000. Then you take the information about purchases. 7 lakhs. By sales. You have the workbook, pick the information, my dear friends. It is 11 lakhs. Then you have closing stock.
1,60,000.
So I hope every student here how to present, how to present this ledger account and all. So the side which is greater, the total you should be taking. So listen carefully, my dear friends. It is 12,60,000. So you write that amount on the other side. In fact, this you should be knowing. I should not teach you. It's like insulting you. But just the one problem, I will tell you what I will do from the remaining problems onwards. Now it is like 12,60,000 minus this 8,20,000 should be your profit to gross profit. So stock only balancing figure no. Previous year every information is available. GP is the balancing figure for finding GPR. So thereby it is 4,40,000. 4,40,000 is the balancing figure. You can write in every account that you present. If you write something as balancing figure, write that as balancing figure, or you put a circle. Indicate that in this working, this is what I have found out. Now we have not completed because it is GPR. It is not mere computation of GP. So we will proceed for the GPR, gross profit ratio, which is actually gross profit by sales into 100. So which is 4,40,000 divided by 11 lakhs into 100. It is 40%. So step number 1 over. Gross profit ratio we have identified as 40%. So step number 1. So this you would have completed. So the frame is also very much there. So my dear friends, you should have copied this. Definitely. In fact, no, in the face-to-face, I told you first problem, like around more than 60% of students would have got all the answers correct. But in the second question, when they solve, no, I have witnessed that 100% of the students, like if it is a big classroom of 800, all the 800 would have got the second question correct. So we'll ensure the parity at that particular discussion level. So thereafter, no, again so many other concepts come. So at least the basic concept covering all the 4 steps, simple problem, all have understood. Which means any student can attempt all the 4 steps. That parity we would have reached any level. They would have secured only just to pass in foundation, the ranker in foundation, all would have got pakka same answer, my dear friends. So that parity we would have created. For that only, we are initially spending some 4 to 5 hours exclusively for the base work, right? So concept and the academical structure also we are creating. 4 steps we already created, correct? GPR, stock on date of hire, loss of stock, claim. Okay. Now proceeding, step 2, stock on date of hire. Stock on date of hire, for which we prepare memorandum trading account. This memorandum trading account is for a period. What is the period? Beginning of the year 2021 la fire. But what is the beginning? 1/4/20. To what is that date of hire? 31st August 2020. So we need to be very clear with that. So okay, so we are preparing memorandum trading accounts. We have opening stock. Opening stock. How much is the opening stock? 1,60,000. 1,60,000 because previous year closing stock. Then we have purchases. 3,65,000 purchases. You have the workbooks. See, follow with the workbook, see the data. When some calculation is made, calculate an experience. Something is happening, sir, anyway calculating and all. So I won't calculate, simply don't know. Happens to be concept alone, you don't see it. Accounts, calculations alone, you should experience it. So practice should be there. It shouldn't be like merely learning. 350 hours you learn and then go to the examination, you struggle to balance both the writing and the calculation. So you should practice right from the classroom level, right from day one. These are the simple things like in the classroom. So 100 students will calculate, 700 students only copy. They are understanding. They are obviously understanding in their copying. But when they are not doing the calculation, so their mindset is like, anyway 100 students calculating correctly, only telling to sir why I should calculate, like that. So right from day one, if you can practice the calculation also, even if it is a small calculation, please do the calculations and experience the number what you write also, right? So purchases, buy sales, how much?
5 lakhs.
It is 5 lakhs. Now the stock we don't know, my dear friends. So since we don't know the stock figure, so it is gross profit. To gross profit, it is 5 lakhs into 40%. So it is 2 lakhs. So that we will be getting, my dear friends, the stock on the date of fire. Directly only you can write buy. Either you can write closing stock or you can write stock on the date of fire. So you can total this. So henceforth I won't take the total on two sides and all. Henceforth I will draw two lines like this. I have a license, I will show you later that the CA license I have to draw these two lines. You don't have it. So until such time you should take the totals on one side, take the total to other side, and you should properly take it. So henceforth in ledger accounts I will simply draw two lines, my dear friends. So proceeding further, so the total minus this amount, balancing figure. What is the balancing figure here? So it is 2,25,000 is the balance. 2,25,000 is the balance, my dear friends. So this is step 2, finding out stock on the date of fire. Memorandum trading account. Proceeding further, my dear friends, to the third step. It is loss of stock. Loss of stock is equal to stock on date of fire minus salvage value, so which is 2,25,000 minus 15,000 is equal to 2,10,000. So the moment we deduct salvage value one amount, we easily understand that is a partial loss. It's a partial loss. So it is not completely lost, it is only a partial loss. So now that, my dear friends, we are proceeding to claim. As far as claim is concerned, it is partial loss. You know, it is partial loss. It is assumed that the policy contains the average clause. The policy contains average clause. We also understand the stock is underinsured. The policy amount is how much? So we understand, my dear friends. So policy amount is 1,50,000 less than stock. It is underinsured. It is underinsured. Then we also understand that it is complete loss, and it is assumed that policy contains, it's assumed that the policy contains average clause. So then only, therefore, I'm sorry, so this is partial loss. It is partial loss. Complete loss means we don't apply this. So therefore, claim is equal to loss of stock into policy amount divided by stock on date of fire. Stock on date of fire. So what is the loss of stock? Loss of stock is 2,10,000 into policy amount 1,50,000 divided by 2,25,000, which is equal to,
1,40,000.
so this is 1,40,000 is the answer. So I hope you understood this. Now listen carefully, my dear friends. Maybe this question also, maybe this is the very last question, where suppose in this the question is very clear that it is under insurance. Is it assumption or it is very clearly given? It is under insured. It is very clearly given, not assumption. It is partial loss அப்படின்றது assumption or it is very clearly given? Very clearly given, because the moment you have salvage value, it is not assumption it is partial loss, it is partial loss, because some stock is saved. No, it is not completely lost. What is the assumption you have made in this problem? That the policy has that mentioning about average class. Suppose in spite of it is partial loss, in spite of it is underinsured, suppose it is the policy, the question says that policy does not have the application of average class. Question very clearly, if it says policy does not have the application of average class, then what do you think the answer will be? What do you think the answer will be?
1,50,000.
Exactly. So in that case, my dear friends, you need to check directly the loss, my dear friends. So what is the loss here? The loss is 2,10,000. Policy amount is 1,50,000. So whichever is less. So thereby, my dear friends, if the policy does not contain average clause, then claim will be lower of policy amount and loss of stock. That is lower of 2,10,000 and 2,10,000 policy amount is how much?
1,50,000.
1,50,000 and what is the loss of stock? 10,000. 2,10,000. Not a stock on date of fire, loss of stock. 1,50,000 and 2,10,000. So that is 1,50,000. So since we had this particular the average class application, my dear friends, your loss was proportionately computed and we got this 1,40,000. Otherwise, if there is no average class, you would have got a higher amount, my dear friends. You would have got how much? 1,50,000 rupees is how you should be understanding, my dear friends. So you will be getting the actual loss suffered will be compensated. So actual loss subject to the policy taken. Actual loss here is 2,10,000, but the policy amount is taken only 1,50,000. So thereby, whichever is lower is what you will be getting compensated. I hope you understood this. So this information about whether the policy contains the average clause or not is a presumption, my dear friends, as far as the institute problems are concerned. But in theory, very clearly given if it is mentioned, if it is not mentioned and all. But if the question does not have information, then your assumption is policy contains or does not contain. If the question does not say about anything about the average clause, then what is your assumption? Policy contains average clause or does not contain average clause? Contains average clause is what. So this answer sufficient. 140 is sufficient. Or clarity I am giving this answer. Don't get confused, my dear friends. I hope you are understanding this. So this is not at all required. I am telling you this answer when I should write. Question very clearly given that the policy does not contain average clause. Then straight away you should be arriving the answer as 1,50,000. I hope you understood this. Okay, so if the question very clearly say we should not apply average clause, then you should not apply average clause. You need not think about anything else. You directly take policy amount, loss of stock, whichever is less. Understood? Okay, so copying times. I hope all of you would have got the answer, which is 1,40,000. You would have already copied this. So this is frame number 1, frame number 1, this is frame number 2, maybe I would say one more frame. Then we have loss of stock frame. What is this frame for? You stop the video, copy, resume the video, go to next frame, stop, copy. If you haven't done simultaneously, right? So I'm doing that particular thing also through this lecture, so that you are copying it completely. Some students simultaneously do, some students requires time. I would say, like, no, whatever your normal speed, in the same speed you write, in that speed you should improve your handwriting. So that is how it should be happening, because 90% of the students will come and tell, I will tell you after first examination, the last 5 years, 10 examination, I keep on hearing the same. That, in fact, not only 5 years, even I used to tell also, like, after the first exam, sir, lengthy paper, sir, lengthy paper. You know, there are two reasons. One is, like, you know, calculations they have not made in the classroom. They used to understand every problem. Then they are doing the calculation newer in the examination hall. They are nervous in the first examination. Speed will not come. The first the openness, no, opening nervousness will always be there, my dear friends. It's a real test match, like nervousness will be there. So speed will not come naturally. Second examination, your comfort. First examination, new room and the bench, environment different. So speed will not come. So all those things are factors. So then very first time you are trying to write new, legible. So all these times classroom note scribbling. Very first time you consciously take it legible. This is another reason why paper is lengthy. Otherwise 3 hours paper is actually 3 hours paper only. People find it 3.5 hours paper, you know. I am talking like this and all, but I also suffered this by not doing adequate practices, mock scenarios, mock examination. Without these practices, student go to examination finding it lengthy paper. We can blame any factors, but it is not going to change. Your paper is also going to be lengthy only. If you have a good writing skill, it is not lengthy paper. That's all. That ends the matter. Anyway, this is how we have just provided the alternative thought process to this answer. Proceeding to the next question, my dear friends. So we have completed 2 questions. So many questions we have. Close to 45 minutes over. We have completed 1 question. Proceeding to the next question, my dear friends. Question number 3. Question number 3. Calculate the amount of insurance claim to be lodged based on the following information. Value of stock destroyed by fire 90,000, insurance policy amount subject to average clause. See, this is the only problem which specifically states that there is average clause. Value of stock salvaged from fire 40,000 rupees. The question is very clear. What is the amount of insurance claim to be lodged? Like how we solved question number 1, no. So similar problem, it is not 4-step approach and all. So straight away GPR not given, sir, previous trading account not given, sir. You see, other information has been given. So straight away you can proceed for the problem solving. You should take only 60 seconds. I am waiting here the 60 seconds I want you to solve. I am seriously waiting for 60 seconds. Question number 1, 2, 3, right? Every question you are only solving. So please solve. Please solve. Don't stare at the screen. Solve the problem. It's not tea or coffee, it's hot water. The normal general meaning of hot water, don't misunderstand. Okay, so let me now proceed. I hope you are ready with the answer. So in the classroom, you know what I will do is I will jot down all the answers, whatever you provide, like simple. One answer only everybody will provide. So one thing is that, my dear friends, in this question number 3, you should know the real focus should be there, pakka concentration should be there. You should not be biased. The moment you see one number, takkane solving, no. Sometimes the speed will kill. So you should be really careful. What you should understand is 2 to 5 exam you are writing. Maybe like you are already hungry. You took lunch 11 o'clock. 2 to 5 your main examination, C examination. So took a lunch long time back. You are really hungry. And at that time, this examiners know very sadistic people pa. They test our the concentration level. So what is that to be? You should understand is that a student, what they should not do is that it shouldn't be 90,000 minus 40,000. They should not do, because the 90,000 itself is loss of stock. It's not 90,000 is stock on date of fire. This is stock destroyed by fire. Stock destroyed by fire, which means 90,000 is loss of stock. This is answer to step number 3. Stock on date of fire minus salvage value is 90,000. So it's an examination question. It's an examination question. So sometimes like that also they play, my dear friends. So what we did, first question number 1, stock on date of fire minus salvage value. Taken we got loss of stock. Currently we compare, we got one answer. No, please be very clear, my dear friends. This is stock destroyed by fire. Once again, stock destroyed by fire means stock on date of fire minus salvage value, stock death. So loss of stock da 90,000. Appo direct claim da inga. Step number 4, claim, because third step answer is 90,000 given. But for claim, my dear friends, what we should understand, it is complete loss or partial loss? Partial loss, because we have salvage value. Sorry, average class, is it there in the agreement? Yes, very much there. The question they told underinsured or overinsured, adukku we should compare policy amount with stock on date of fire, for which I require stock on date of fire. I should not compare policy amount with loss of stock. So anyway, even that comparison we know it is underinsured only, but we should compare policy amount with what? Stock on date of fire. So what is the stock on date of fire? Very simple pa. I had X amount. X I saved 40,000. I saved 40,000. So what I have lost is 90,000 pa. X minus 40,000 is 90,000. Understood? So what I had was high amount pa. Adala I saved 40. Balance I have lost na. What I had 1,30,000. I lost 90. I saved 40. But total I had on fire how much? 1,30,000 I had, is what you should understand, my dear friends. So thereby proceeding to this question number 3. Question number 3 la you should understand, given loss of stock equal to 90,000. Stock destroyed by fire is loss of stock. You should identify. That is the crux of this problem. Other things simple only. So thereby we take this policy amount is 60. Salvage value 40,000. Let me find out, my dear friends. Stock on date of fire. Stock on date of fire is equal to loss of stock plus salvage value, which is 90,000 plus 40,000, which is equal to 1,30,000. 1,30,000. So my dear friends, once we arrive at that particular 1,30,000, we will proceed for the claim. Now claim. My dear friends, the stock is underinsured. Based on the above comparison, we can the stock is underinsured. So claim is equal to loss of stock into policy amount divided by stock on date of fire. So we find loss of stock is how much? Loss of stock is 90,000. Policy amount 65,000 divided by 1,30,000 is equal to 45,000. So some students would have taken this as like some directly like 50,000 into 50,000 divided by policy amount of 65 divided by the 90,000, like that would have taken, my dear friends. So I will tell you, some students would have got the answer like 50,000 into 65,000 by 90,000. How this answered? Because they take the 90,000 as stock on date of hire. They mistakenly take stock on date of hire as 90,000. However, they take salvage value, that way they get loss of stock. Policy amount is 65. Stock on date of hire they are taking as 90. So you know what is the answer for this? 50,000 into 65,000 divided by 90,000. So some 31,111, some fancy numbers you will get. 36,111. So this is what I usually get because of the speed. Sir, question number 1 we solved. So 90 minus 40, 50. 50 into 65 by 90. Like that, very quick calculate, but concentration level, this is wrong. This is not correct. I hope you are understanding, because the question what they have given itself is loss of stock. You should be knowing. Clear? Don't make the mistake like this. Also, sadist examiner is there. Room போட்டு யோசிப்பாங்க. So they will book a room and think about the questions, and they create questions like this so that they want the students to go on something like that, my dear friends. So you need to really focus onto the question. Don't be biased. Read the question with calm mind, my dear friends. So copying frame number 1 and frame number 2. So we are completing now 3 questions. Proceeding to the next question now, my dear friends. It is question number 4. On 12th June 2020, fire occurred in the premises of N.R. Patel, a paper merchant. Most of the stocks were destroyed. Cost of stock salvaged being rupees 11,200. In addition, some stock was salvaged in a damaged condition, and its value in that condition was agreed at rupees 10,500. From the books of accounts, the following particulars were available. His stock at the close of account on December 31, 2019 was valued at rupees 83,500. Purchases from 1/1/2020 to 12th June 2020 amounted to 1,12,000. And his sales for that period amounted to 1,54,000. This is the beginning of the year till the date of hire. On the basis of his accounts for the past 3 years, it appears that he earns on an average. This is what I told you, average GPR. They have computed average GPR of 30% of sales. Patel has insured his stock for rupees 60,000. Compute the amount of the claim. So if you analyze in this question, my dear friends, the question is what? Compute the amount of claim for loss of stock. Compute the amount of claim for loss of stock. But naturally we understand, my dear friends, claim for loss of stock means you have 4-step approach. What is step number 1? GPR. So you look into the question, GPR given if you search the question last line la, so just 2 lines before the last, they have given GPR. How much is the percentage? 30%. So step number 1, GPR given. So you can just simply note GPR 30%. Then step 2, find out stock on the date of hire by preparing memorandum trading account. We understand the fire occurred on 12th June 2020, and by the information only you should understand, in this question the beginning of the year happening to be January. So the context of the question, in one problem it will be April to March, in another problem it could be Jan to December. So So based on the information given only we can analyze like that, because you might tell, the last question you took April to August, now you are telling like Jan to June. So that is how information given. So that is how we need current year information. We know 12th June 2020 is the date of hire, beginning of the year. By reading the question I understand 1st January. So I will prepare memorandum trading account for what period? 1/1/2020 to 12th June 2020 by taking opening stock, purchases, sales, profit, so that we will arrive closing stock as balancing figure. Then step 3 is loss of stock. For finding loss of stock, we have stock on the date of hire minus salvage value. So I would like to explain you, my dear friends. Very simple here. Sir, what is this? Sir, I am not understanding. It has been given most of the stock were destroyed. Cost of stock salvaged being 11,200. Cost of stock salvaged being rupees 11,200. In addition, some stock was salvaged in a damaged condition and its value in that condition was agreed at 10,500. Abdina, what happened is that when you saved stock, some stock has been saved in good form, normal conditions, like it is saved. So normal salvage value, it is a good condition stock. So that much stock is 11,200. In addition to that, some more stock has been saved. Some more stock has been saved, but it is in a damaged condition. It is in a damaged condition. The damaged condition of the stock is saving is 10,500, which means both are only salvage value, both are savings, which means what? Out of the total stock I had on date of hire, this is what I can recover. This is what I can recover now. So that will be deducted. So that balance is what I will understand that as I have lost by fire. So please you understand, my dear friends, what is this two different types of stock. I will put it in a simple example here, my dear friends. The example before this, suppose I had with me 100 units. 100 units I had which is having a cost price of, say it is 5 lakhs. 100 units 5 lakhs. About what we understand, it is 5,000 per unit. 5,000 per unit. Okay, sorry. Now listen carefully, my dear friends. We find that so there is no sales and all. Opening stock plus purchases together is 5 lakhs. Now what happened? There is no sales. When there is no sales, suppose during fire accident, what happened? I find that I had on the date of fire 5 lakhs. No. Whatever I saved, balance I presume to be destroyed by fire. So what happens now? 10 units I saved in a perfect condition. 10 units I saved in a perfect condition. Another 5 units also I saved in damaged condition. In damaged condition. But 10 units I saved in a perfect condition. Naturally, the value will be what? 10 into 5,000, it will be 50,000. 10 into 5,000, it will be 50,000. Then I also saved 5 units. Actually, if you ask me how much I have lost, you should not tell, sir, 15 units you saved. 85 units you lost, sir. 85 units into 5,000, 85 units into 5,000, you should not arrive at the answer. I will tell you, 85 into 5,000, you will be getting 4,25,000. This is what you lost, sir. 85 units lost. 85 into 5,000 you lost. You can't tell because in the 5 units though I saved, that is in a damaged condition. Adukku I can't fix a value of 5,000. Imagine I can get only 2,000 rupees. Imagine I can recover only 10,000 rupees. Suppose my loss by fire is not 4,25,000, my dear friends. So you can take it. There are two forms you can calculate. Formula wise what? Stock on date of hire 5 lakhs and salvage value is 60,000. It is 4,40,000. Common sense, you can apply this. Another form of common sense what abdina? Sir, 85 units are last. Units 85 units. Definitely 85 into 5,000 last 4,25,000. Then in the 5 units though you saved, you should have got 25,000 for it. You should have got 25,000 for it. And the 25, but you can recover only how much? 10,000, which means even though it is saved physically, but the value was lost by 15,000. Even though physically it is saved, but there is some loss in value for it. Understood? Generally, but loss by fire na, it could be a quantity loss or sometimes it could be the value loss because of the damage happen. Understood? So that way we find that in the 25 I can recover only 10,000 na, I lost in this unit also. In the 5 units saved, but from this also I have a loss. How much I lost? 15,000. Appo 4,25,000 because of fully destroyed by fire, and 15,000 because of damages. Our total loss will be how much? 4,40,000. This is the basic concept. I hope you are understanding this. So thereby there could be two way of loss. One, complete burnt, thereby entire cost price lost. Another one is even though saved but it is damaged, so thereby then some loss in value. Correct? Appo you should be understanding both are my loss. For that what you should do na? Goods saved, no. Goods saved, good condition units na, straight away value at cost price. Not selling price, you can value only at cost price. Damaged goods na, then you should value at the amount at cost or the amount expected to be realizable from that goods. This is common sense approach. Anyway, detail I need not tell, I can simply tell salvage value equal to that good units plus damaged goods value, that's all. Understood? That is what we understand as salvage value. Anyway, so this is only for an explanation purpose we took it. So we are now coming to this question, my dear friends. Listen carefully. Question number 4. First, what GPR given in the question as how much? 30%. Given GPR is how much? 30%. Given in the question. I need not calculate. We need not calculate. It is given in the question as 30%. 30%. Proceeding to the next one. This is step number 1. No. Step number 1. Step number 2, my dear friends. We have what? We have the stock on date of hire. Stock on date of hire. For which we prepare what? Memorandum trading account. From beginning of the year 1/1/2019 or 20 20 to 12th June 2020. So we take those information, my dear friends. So they have given the question as the opening stock figure. It is given stock at the close of December 31, 2019. This is the opening stock. Closing stock of the previous year. Opening stock of current year. How much? 83,500. So it is opening stock to opening stock. How much? 83,500. Purchases. So they have given purchases 1,12,000, sales 1,54,000. 1,12,000. Sales 1,54,000. Gross profit is equal to 1,54,000 into 30%.
46,200.
So it is 46,200. So we will be getting, my dear friends, stock on date of hire. Buy stock on date of hire as balancing figure. So 87,700 is the stock on the date of hire. My dear friends, then we will proceed for loss of stock. Loss of stock, we find stock on date of hire 87,000 minus salvage value. I would say good units, because when I understand that 11,200, in addition some goods in damaged form 10,500. Now 11,200 I understand that as good units, 10,500 damaged units. Okay, so it is 11,200 and damaged 10,500. So thereby it is 21,700 is the total salvage value. So thereby we understand it is 66,000 is the loss of stock. The stock, the value wise, it is 66,000. So now proceeding, my dear friends, for going for the computation of claim. Complete loss or partial loss? Partial loss. Seri, the average class mentioned or not mentioned on your question is not very particular abdina. What is our presumption? It is mentioned. Like that we tell. The third, we need to check whether it is underinsured or not. Policy amount is rupees 60,000 less than stock. Stock on fire. Stock on date of fire. So it is underinsured. Our claim will be how much? Claim is equal to policy amount into, loss of stock into policy amount by stock on date of hire. So loss of stock, how much? 66,000 into 60,000 divided by 87,700, which is equal to 45,154. My dear friends, suppose question specifically says that this policy does not contain average clause, then what will be the answer? So then answer will be directly 60,000. Loss of stock 66,000, policy amount 60,000, whichever is lower. So you would have got higher amount. So then why they are not giving that amount now? So we want to discourage. Some insurance company want to discourage. Sir, where it is given that average clause should be applied, the policy contains. Now I told you, adukku told you, academically, if the question doesn't say, student has to assume the policy has average clause. Understood? So that is how you should be taking. But sometimes, even though policy has average clause in it, but if the stock is not underinsured, then you need not apply this particular average clause. So only if it is underinsured only you should apply. I hope you are following this, right? Okay. So copying frames. I took some examples, made you to understand what is the two types of salvage value, sir. Now, two types of salvage value is because of goods saved in perfect condition and goods saved in dash condition, damaged condition, like the two types. Both are anyway salvage value only. Understood? I hope you don't have any confusion over it. So I told you like this, no, straight away you can't tell. I measured, sir, last units, 85 units last, 85 into 5,000, abdini you won't get. So that is what we are telling. About what you should do, always it should be the total goods you have at dash price, cost price. Then you measure the salvage value. Measure the salvage value in its form. Good farmer, bad farmer, accordingly you measure the salvage value. Simply deduct the salvage value. You will be getting loss of stock, maybe because of units lost as well as value lost. Understood? That is how you should be taking, my dear friends. I have explained that through a simple example, common sense example, and then we have taken this particular problem, copying frame, my dear friends. The first frame, maybe this is second frame. 1 to 2 seconds only. It's not copying time. For stopping the video, copying it. The third frame. The fourth frame. So that way we are completing that question also, my dear friends. So proceeding to the next question now. Shall we? Okay, proceeding. We are going to take now question number 5, my dear friends. So we are going to take question number 5. from the following, calculate the closing stock and claim as on the date of hire. Opening stock rupees 29,700 was calculated at 10% less than the cost. Purchases rupees 80,000 include the purchase of plant for rupees 5,000. Wages rupees 33,000 includes wages of rupees 500 for installation of plant. Goods costing rupees 5,000 were taken by proprietor for his personal use. A sum of rupees 2,200 was incurred by way of firefighting expenses on the day of fire. Sales invoices raised up to the date of fire rupees 1,50,000. However, goods of the value rupees 10,000 had been returned by the customer before the date of fire. Stock to the value of rupees 3,000 was salvaged, out of which 10% was handed over to the insurance company. I hope you remember, loss of stock is equal to stock on date of fire minus salvage value retained. So that point you should remember. Rate of gross profit is 33 1/3% on cost. Sum insured is rupees 25,000. So many informations are available in this question, my dear friends. So proceeding further. Okay. So I want to take some special points about this. So very quickly I will discuss this number one. I will discuss it and then we'll jot down the special aspects of this question, or yellow box will create something that we don't write in the examination. For our understanding and later on verifying the these inputs and points, for that we are going to jot down. So first I will discuss number one, then I will write the points, then you will solve the problem, then I will solve the problem. So let us have now four aspects for this question. Question number 5. Many students will be knowing it. So most of the students know who are accustomed to accounts, slightly having higher grasp will be knowing it. But I would say here the discussion also. Okay, listen. Opening stock rupees 29,700 was calculated at 10% less than the cost. 10% less than the cost. So if at all in a topic called insurance claim, if the question is stating that stock overall has been undervalued or overvalued, then for the purpose of the claim purpose, you have to bring that stock to the original cost price. Such stock should be brought to the original cost price. Suppose there is some overstatement, because there might be some stock valuation policy, my dear friends. The stock valuation policy is maybe by following some different methods of stock valuation, and thereby it might be resulting into, they know that always it is resulting into a valuation of slightly more or slightly less, and which is part of the policy. Sir, why did they value, sir? Is it not stock has a valuation policy? Yes, they have to value at cost or NRV, whichever is lower. But determining cost, my dear friends, you have so many tedious formulas and concepts applicable. So you have standard costing, retail price, like that, so many costing formulas accepted, my dear friends. So thereby they understand that their valuation will generally result into the stock being valued 10% more or 10% being less. So that way you should be understanding, my dear friends. So it might be due to the standard costing formula or any other valuation techniques they follow. Anyway, we are not going to here first of all to question them, why did they undervalue, why did they overvalue. So it's okay, it's been undervalued, it's been overvalued, and it is correct for their accounts. Now when you are going to prepare a sheet or workings for the computation of claim, be very clear, they are not going to compensate you more than the cost. You bought goods for 5,000. You want to sell for 7,000. Before you sell it, it was destroyed by fire. I purchased for 5,000. I wanted to sell for 7,000. But before I sell, destroyed by fire. Insurance company will compensate me how much? 5,000 only. Sir, I would have earned 7,000 now. We will give only 5,000 rupees because that is the actual loss that you have suffered. Understood? Sir, I valued the stock at 5,600 in my books, sir. Valuation is not a transaction. Valuation is just that it's an event. So in that case, my dear friends, I purchased for 5,000. I valued for 5,600. Then I wanted to sell for 7,000. Before sale, it was destroyed. How much insurance company will compensate me? Insurance company will compensate me only 5,000. My actual loss, valuation is not my gain or loss, my dear friends. I purchased it for 5,000. How much cash you paid? 5,000. Then due to some valuation formula, I applied and I valued this at 5,600 in my books. So I purchased on 1st March for how much? 5,000. 31st March, I valued in my books closing stock 5,600 due to some formula application, my valuation policy. Correct? Sorry. Next year, 5,600 I wanted to sell for, in my books, stock is appearing at 5,600. I wanted to sell for how much? 7,000. I wanted to sell for 7,000. Now that the fire accident came and my stock was destroyed, how much will the insurance company me compensate? 5,000 only, not my book values of stock, my dear friends. What value I measured is not the question. Ultimately, what was the cost of the goods? Understood? Suppose I purchased it for 5,000. I purchased it for 5,000. Due to my stock valuation policy, I measured that particular stock at 4,500. I measured at how much? 4,500. Stock valuation policy, not because of NRV. It is just that there is some understatement I have made to determine the cost. The cost was determined at not NRV, my dear friends. So you need to understand very technically here. My cost was determined at 4,500 and you will only when you take for this 5,000 you may not understand what is the difficulty in understanding cost and all. My dear friends, I purchase goods on different rates at different times. Or 365 days, every day I buy goods at different rates. Manufacturing sector will have manufacturing cost different prices on each manufacturing date. Understood? Appo, the identification of cost is a difficult task. Only when you take AS2 you will be understanding standard costing formula, retail price formula, FIFO model, the weighted average model, all these things just to identify cost for the goods. Understood? But stock valuation techniques you have plenty of numbers, due to which there might be overstatement or understatement of stock. I hope you are following this. Okay, anyway, coming back to this. So due to such stock valuation policy, in my books, book value is 4,500. How much? Book value is, but actually I purchased for 5,000. But due to my valuation policy, I am showing this is how much? 4,500. I wanted to sell for 7,000. Fire came, destroyed my stock. How much will they give me? 5,000. They have to give me 5,000. So that's the point I am telling. If there is understatement or if there is overstatement, the stock has to be valued at original cost to price. The stock should be valued at original cost. Let me give you another scenario here. So we have the conceptual clarity. I purchased for 5,000. I purchased for 5,000. Then goods got slightly damaged. Not because of fire accident. Due to the transport only, the goods got slightly damaged. Correct? So because of the damage, I valued the goods at 4,500, which is the NRV, not the cost to price. I call this as NRV, 4,500. So which means even if I sell it to outsiders, I will be getting only 4,500. Understood? That is called NRV. So this is not the cost determination policy, this is a valuation policy of like cost or NRV, whichever is lower. So cost we are telling 5,000, but NRV we are telling 4,500, and thereby I valued at 4,500. Now fire came, destroyed my stock. How much will they compensate me? They will compensate me only 4,500, because due to fire, how much I have lost? Due to fire, I have lost only 4,000, which means if the fire did not happen, how much I would have got from stock? 4,500. That is what I have lost by fire. Do you apply the common sense here? So that way, please understand, my dear friends, if the cost price is overstated or understated, then you should bring it to the original cost to price. But if it is representing an NRV, then that will not be converted into cost to price. I hope you are following. So be very clear, my dear friends. So, confusion. Hear it, then practice 2-3 questions. Slowly you get accustomed to. So finally, what are you telling, sir? I am telling like this, my dear friends, if there is some overall understatement or overstatement in the cost price of the goods, if the prices of the goods is representing more than cost price or less than cost price for total goods, not specific goods, in that case, my dear friends, bring the goods to their original cost price. Bring the goods to their original cost price is what we are telling. It is either in the presentation of trading account of previous year or in the presentation of the memorandum trading account of current year for a fire affected period. Whichever be the period, if the stock is overstated or understated, bring it to their original cost price. Lesson number 1 from question number 5. Question number 5 ki lesson number 1. I hope you are understanding this. Okay, we'll jot down the special points later. So first you understand. So what is it I told you? If there is understatement or if there is overstatement, bring it to the original cost price. Bring it to the original cost price, number 1. Number 2, purchases include rupees 80,000, include purchase of plant for rupees 5,000. Sir, when we say trading account, when we say loss of stock, we can't have capital expenditure, furniture purchase, machinery purchase, etc. Wrong, they have accounted in the purchases. So then that should be eliminated from purchases. If the purchases contains any purchase of assets, purchase of assets other than stock, it has to be eliminated. So if trading account items contains any items other than stock, then that has to be eliminated. Why I should eliminate? If you don't eliminate, what will happen? Sir, you are going to arrive purchases no one number you are taking. Based on that value, we will arrive closing stock as balancing figure. So whatever is there in purchases, if not sold, it will appear as dash closing stock. If purchases furniture, machinery included, then anyway it is not sold, that will appear as closing stock. Correct? So thereby we don't want, we are going to find out stock destroyed by fire, not machinery destroyed by fire, not furniture destroyed by fire. Correct? If there is some assets wrongly included in the purchases, that should be eliminated. So that is what we are understanding through point number B. And wages less, similarly installation of plant is included, that should be excluded from the trading account. Then goods costing rupees 5,000 were taken by the proprietor for his personal use. Now listen carefully, my dear friends. Once again, what is the basic common sense we are applying in this memorandum trading account? Opening stock plus purchase is the total goods available. Whatever goods has been sold, balance is the goods I would have had. Correct? Opening stock plus purchase the total goods in my shop. Whatever sold, if I deduct, balance is the goods I should have had in my shop. But the problem is that sometimes some goods has gone out of my shop, but it is not sales. It is not sales. Then I should specifically exclude that goods also from trading account. So that because it is already gone out of the shop. On the date of fire, that goods is not there with me. Correct? So what happens now? So purchase the goods are included. I have used some goods for my own consumption, which is not there in the sales. Upon the own consumption goods will appear in the closing stock, what I arrive as balancing figure. Opening stock plus purchases minus sales will appear as closing stock. No, but already consumed goods is there with me. Already consumed goods, is it there in the shop? No. Is it destroyed by fire? No. So thereby that should be eliminated. Understood? So not only consumed goods, goods gone out of the shop, not sales, it should be also eliminated. How eliminated? Either you can show it as reduction from purchases. You can show it as reduction from purchases, or you can show it in the credit side. We don't mind, sir. Here we are not discussing about accounts. We are actually calculating it. Even if you do a statement form, total opening stock plus purchase minus this, minus this, minus this, you can do a statement form also. Correct? So don't worry about, sir, which is correct, sir? Crediting in the trading account, deducting from purchases, which is correct, sir? Both are correct. This is the place you should grow. You should show the maturity level. It is not like deducting from debit side, putting in the credit side. make the judgment, you can do anything. It's not rule. At school level only, deduct from purchase, they will tell. It is not so actually. Draw the line, debit, credit. No, nothing like that sort. So once you go into accounting stream, you draw the line, people will understand that this side is debit and this side is credit, even if you don't mention it. So you should show that maturity level. No, you're not going to get reduced marks because you didn't write debit and credit. It will be better you write. If you forget also, you need not really worry. I will not get the marks because ledger account I didn't use debit credit. I hope you're understanding this. Okay. Anyway, coming back to this, my dear friends. So the point is, the third point. What I'm telling, any goods that has gone out of the business enterprise and it is not sales, then it should be separately eliminated from the trading, either by deducting from purchases or by showing in the credit side of the trading account. Either you reduce it from purchases or show it in the credit side of the trading account. You are eliminating from dash trading account. Eliminating from closing stock, exactly, eliminating from closing stock. So it is either by reducing purchases or showing in the credit side. If you reduce from purchase, anyway, that is not there in the debit. Correct? Appo, from this debit only we reduce sales and we arrive at the closing stock. Appo, naturally it is eliminated. Understood? So some students will tell, sir, what if I find out the stock, then I will reduce. Please understand, we are titling the second working as stock on date of fire. Naturally, that should have been automatically incorporated in the trading account. Separated, don't deduct. Understood? Sorry. Finally, this is the third point. What is the first point? In case of any understatement or overstatement in determining the cost price of the opening stock and closing stock, it shall be brought to the original cost price. If the purchases includes any purchase of the assets other than the stock, it also should be eliminated. Similarly, goods gone out of the enterprise, but if the goods has been gone out of the enterprise and if it is not sales, it should be eliminated from the stock by either deducting from the purchases or by showing in the credit side. 3 points conveyed. These are all special points, my dear friends. Proceeding. So next point is, a sum of rupees 2,200 was incurred by way of firefighting expenses on the day of fire. A sum of rupees 2,200 was incurred by way of firefighting expenses on the day of fire. So I told you, when fire accident happens in our place, what will happen? Two things can happen. Either use extinguishers, put off the fire, like that you can use the fire extinguishers, correct? Or you can save stock, and the saved stock we call it as salvage value. But if you incur expenses to put off the fire, that is called fire fighting expenses. Those expenses incurred to put off the fire, we call it as fire fighting expenses. Some insurance company will compensate you even money for firefighting expenses. Actually, you took insurance for what? Stock. But insurance companies generally, most of the insurance companies generally compensate you not only the stock you lost by fire, but also those expenses incurred to put off the fire. Those expenses incurred to put off the fire. Why should they compensate you? Because if you try efforts to put off the fire, then more stock will be saved. More stock will be saved. So which will be gain for whom? Businessman ka, insurance company ka. Insurance company, to that extent they need not compensate you na. But thereby they encourage the firefighting expenses. But please understand, it is not they want you to incur firefighting expense and all. It is just that if you incur firefighting expense, you will try to save more stock. Naturally there should be some common sense that will be prevailing here, my dear friends. So you apply the common sense. They will compensate you such firefighting expenses generally not more than the salvage value. Not more than the salvage value. What is salvage value? Those stock saved. So why did they compensating firefighting expense? To save more stock. Appo to save 5,000 stock, you incur 10,000 rupees expense na, it is absolutely rubbish, nonsense, correct pa? To save 5,000 rupees stock pa, you are incurring expense of 1 lakh rupees firefighting expense na, adukku you need not have saved that 5,000. So for me, I need not compensate 1 lakh, correct pa? But generally common sense is what na, firefighting expense any limit is there or na, so there might be limit in amounts also. Some insurance company will tell, we will compensate firefighting expense subject to a maximum of 10,000 rupees, subject to a maximum of 5,000 rupees, like that amount they may tell. But the basic common sense is that generally it will not be more than dash value, salvage value, understood? Because there should be fairness. To save 5,000, we can spend 2,000, you can spend 3,000. At the most you can spend, to save 5,000, at the most you can spend how much? 5,000 only. You spend 6,000, you spend, no problem, we will not compensate you. Ultimately, for our gain only, we are compensating you firefighting expenses. I hope you are following this. So thereby, to save more stock, naturally there is a limit. When I give elaborate discussion, then lot of doubts will come. Students will start thinking. But the problem is that their thought process at a school level thought process when it comes na, sir, please you understand my difference, idella depends upon insurance contract. So whatever every form, like what if this, like if I spend 7,000, if I spend 4,000, first of all these are the compensation purely regulated by what is given in the agreement. So any specific aspect you ask, I should look into the agreement. It will change from time to time. Now let us take some academical points only here. What is practically rules? This is not rule. This is agreement between the business entity and the insurance company. I hope you are following. So thereby, different situation, common answers you can't expect in the classroom. But for problem solving, what we will tell is that firefighting expenses will be compensated. Firefighting expenses will be compensated. Now the question is, sir, firefighting expense also will be subject to average class? Yes, it will be subject to average class. See, there will be some, in practically some other case, some insurance company will provide firefighting expense in full without applying average class and all. But for academical purpose, you understand the general rules. Two things only I want you to understand. Firefighting expense will be compensated. Yes. What is the limit, sir? Up to the salvage value. Number two, will that be applied to average class? Yes. If the stock you are applying average class, this amount also will be added to average class, which means this amount should be added at the time of determining the claim. How to determine the claim? It is the or you can add this at the time of computing the loss of stock. Loss of stock equal to stock on date of fire minus salvage value plus firefighting expenses. Like that you can calculate, my dear friends. So in determining the loss of stock, you can take that particular amount. I hope you are following this, right? So anyway, proceeding further, my dear friends. In finding out the loss of stock, you can take these amounts, my dear friends. It is stock on date of fire minus salvage value plus firefighting expenses. Like that you can consider. I hope you are understanding. Shall we proceed? Sir, this is the fourth point. Sales invoice raised up to the date of fire 1,50,000. However, goods of the value of rupees 10,000 had been returned by the customer before the date of fire. If the goods has been already returned, then the goods are already there with us. So thereby, what you should do? Sales minus sales returns you will be showing, which means you will show the real sales as only 1,40,000. So stock to the value of rupees 3,000 was salvaged, out of which 10% was handed over to the insurance company. This I have already told, which means salvage value is 3,000, but what we should consider is salvage value retained. How much I should consider? 300 or 3,000? I should take 2,700, which is the retained value. Then finally, the last point is that rate of gross profit is 33.1/3% on cost, which means in this question, gross profit ratio given. Gross profit ratio is given, but it is given on cost to price. It is given on cost to price. At your foundation level, degree level, +1, +2 level only, you would have understood this concept, my dear friends. So if the question doesn't mention anything, generally the gross profit ratio means it is always on sales. GPR means it is always on
Sales.
generally on sales. But if the question specifically state is on cost, then we should convert this in terms of sales. We should convert this in terms of sales, and you should be applying on the sales figure, because we are going to apply this particular GPR on what amount? Cost liya, sales liya. You are going to apply GPR on sales. Upon naturally, you should know how to convert this. So in fact, I can't spend 45 minutes or 1 hour to explain this, because it's like insulting you only. Everybody knows this. So basic concept is what? Suppose it is given as 30% on cost. About what is on sales, my dear friends? So first 30% on cost. How much on sales? It is 30% on cost. 30 by 100 on cost. Or percentage means what? 100. So when I say I secured 60% marks, naturally it is 60 out of 200. 100. About 30%. First 30 by 100 on cost. This is equal to 30 by 130 on sales. 30 by 130 on sales. And the percentage you need not convert. If you want to percentage, multiply by 100, you can convert it. So anyway, you can explain that in the fraction format. So 30% on cost, 30 by 100 on cost, which is equal to 30 by 130 on sales. So this is how you should take. First on the percentage, fraction you convert. How to explain a fraction? Percentage is 100. Out of 100, how much? So 30 by 100 on cost. Now, how do I get 30 by 130 on sales? Sir, should I apply a formula like this? Numerator, denominator should be added. 1 should be added like this. You would have learned 1/4 on cost equal to 1/5 on sales. Consignment chapter, sale or return, like that. So many places you would have applied this. Anyway, but some students, if they have not coming through this stream, you should understand it's very simple that in 5th standard you have learned one formula. That 5th standard formula should be applied. What is that? 30 by 100 on cost, meaning what? The fraction meaning is there, no? What is the meaning? 30 by 100 on cost, it means cost price equal to 100, profit is equal to 30. What is the selling price? Cost price 100, profit is 30. What is the selling price? 130. But what is profit is to selling price? Profit is to selling prices. Profit is how much? 30. Selling price is how much? 130. So it is selling price 130. So if I know these three numbers, what is the margin on cost? 30 by 100 on cost. So if I tell cost price 600, profit 100, selling price 700. What is profit on cost? Profit on cost 100 by 600. What is profit on selling price? 100 by 700. That is what you will take. Understood? But this common sense you should be knowing. If you know this, then actually selling price to cost price conversion, cost price to selling price conversion is easy for you, because you should not be always thinking, should I add or deduct? The basic comes from the basic concept of what is cost price and what is profit and what is selling price. Understood? Anyway, in this type of problem, we are not going to convert into selling price into cost price and all. In your consignment chapter, you would have learned both the conversions. So, if it is simply mentioned as gross profit ratio, that's on cost or on sales? It is on sales. Only if the question specifically says that it is on cost, it is on cost. Understood? If it is on cost, you should convert into sales is what you should be understanding. I hope you are following. Anyway, so on the point you should be aware of, my dear friends. So these many special points, idella elementary da, but sometimes you would have forgotten elementary things, no? At the appropriate time I want to take it in elementary level only. Had it been face to face, this much elaboration I would not have done, but I don't know what is the depth or pulse of the students at which you will be hearing it. So I presume at a very common man level, we are just taking the discussion, very pretty average student like me. when they are learning, who may take some time to learn things. So from that angle only all this discussion, because by this time maybe in 20 minutes only we would have completed this problem and we would have gone to the next question in a face-to-face lecture. So online lecture, this is most advantageous thing, because we can spend as much time in explaining again and again very fundamental points of each of these points relating to this question, my dear friends. I hope all of you understand this particular concept. Now what we are going to do next segment is discussion over now. We'll jot down all these points in our yellow box. We'll take yellow box special points, not for examination writing, that is not part of solution. Now these discussion you have understood. Now later on one day you will forget this. So in a face-to-face I would not have given this, but online live we are giving this extra efforts, advantages of online classes, recorded versions, etc. and all. So we will provide that particular notes also. In face-to-face I expect the student during discussion only they should have written notes. I don't give this particular notes, etc. and all. But in this platform, no, when the faculty is there, the fear element is there. There may people used to write. The faculty is not there, I don't know whether you write or not. So you will write. If I write, if I scribble, you will scribble. If I don't scribble, you will not scribble. So that I have already seen that from the students. So thereby I thought of giving some points here. So question number 5, and I am proceeding for some special points there. Question number 5. Solution, sir? No. Is this something that I should write in the examination always? No. This is just for your future reference. Special points. If the stock opening or closing is overstated or understated, the stock opening or closing is overstated or understated, then it shall be brought to the original cost price. It is not a selective stock. Selective stock, then that might be the NRV. It's an overall stock. It's if the stock, the total stock, if the total stock opening or closing is overstated or understated, then it shall be brought to the original cost to price. Okay. Now here also, my dear friends, so let me give you an example here for you to understand better, my dear friends. It is like this. See, stock given, it is 1,35,000. 1,35,000 valued at 10% less than cost to price. Stock is already given the question at 1,35,000, means what? And it is already given that it has been valued at 10% less than cost price. Now, it's not an instruction for you to reduce. It means this stock is already reduced now, or you need to reduce. This 1,35,000 is given the question. They are also telling stock has been valued at 10% less than the cost price, which means this is already reduced now, you need to reduce. Already reduced, which means you should bring it to the original cost price. But you should add or deduct. You should add now, correct? Now the problem is that, my dear friends, what is the original cost to price? You need to find out original cost to price. So how do I find out original cost to price? 1,35,000 is given in the question, sir. What was the reduction? 10%, sir. Up I should increase by 10%, so which is 13,500. So it will be 1,48,500. Like this, if you do now, this is wrong. This is wrong. So, sir, it is understated, sir. Correct. I should bring it to original cost price. What I should do? Add or minus, sir? Add. But you can't apply the 10% on 1,35,000 and add. You will get a wrong answer. Why is it wrong answer, sir? I will tell you. Because X was the amount. X. On that X, 10% was deducted. The 10% was computed on what amount? X. You deducted and you get some reduced number, correct? Which is 1,35,000. Now this 1,35,000 represents 90% of X. So you can't apply the 10% on a reduced number. The 10% was supposed to be applied on the original X number. So now listen carefully, my dear friends. What I should do understand is that original cost to price is equal to original cost price is equal to 1,35,000 represents 90%. What is 100? You should be finding out. So either divide by 90% or divide by 90 into 100 you do. Calculator take 1,35,000 divided by 19 put percentage you click, or it is 1,35,000 divided by 90 into 100. Sir, percentage I don't want special characters, I don't want, sir. By 90 into 100, like that you multiply, or directly take by 90% you do, you'll be getting how much? 1,50,000. 1,50,000 is the original dash price, cost to price. In this 1,50,000 only 10%. How much? 1,50,000 10%? 15,000 you would have deducted. So if you have deducted this 15,000, you would have got how much? 1,35,000. But on 135, if you add back 10%, you will not get 1,50,000. You are getting only 1,48,500. This is wrong. Understood? Why? Because the 10% is not on the reduced number, 10% is on the original number. So the base is different. I hope you are following. So thereby, whenever it is given that it is already reduced by 10%, now you can't simply add by 10%. That is wrong. So first you should understand addition da, but you can't do that simple direct additions here. So you should understand the given stock represents how much percentage? 90%. You should know what is 100%. I hope you are following. Anyway, this is how you will arrive at 1,50,000, my dear friends. Suppose it is example 2. I am telling like stock given as like 2,64,000. 2,64,000 given stock given, valued at 10% above cost price. Valued at 10% above cost price. It is overstated or understated? Already increased, you need to increase. Already increased. You should actually reduce it to bring it the correct price, but you should not directly minus 10%. You should tell that this given stock of 2,64,000 represent 110. So you should not simply deduct 10% here. If you deduct 10%, you won't get the answer. So what you should tell? You should tell that, sir, 2,64,000 represent how much? 110. So what is 100? You will find out. So what is that number comes to? 2,40,000. I hope you are following this. So I have taught you one major principle. If the total stock has been understated or overstated by a certain percentage, then it should be brought to the dash price, original cost price. Now how to bring it original cost price, a technique also we have explained to you. I hope you understood this. One special point now over. Can I go to this other points, my dear friends? So again, the example I should write down. No, absolutely for an explanation purpose. Or a single question, why do you take 1 hour, sir? So that you will get good ground for solving other questions on your own. I don't want you to directly give answer to question number 5. I want to explain the concepts involved in question number 5, so that I want you to solve question number 5. I hope you are following this. So proceeding, my dear friends. If purchases includes capital expenditure, then it should be eliminated from purchases. Similarly, if goods has gone out of business enterprise, not by way of sales, if goods has gone out of the business enterprise, for what purpose? Own consumption or advertisement purpose, given to employees, or for promotional purpose, charity purpose, like that. So many purpose you give goods. It is not sales. Sales you credit as sales. If it is not sales, but you know goods have already gone out, it is not there on date of hire now, then should be eliminated. No. So not by way of sales, then it should be eliminated from stock by deducting from purchases, either by deducting from purchases or crediting in dash account, trading account. Either you can deduct from purchases or you can show it in the credit side, which is more correct. Nothing like that, both are correct. I hope you are understanding. So that way you should take that particular point, my dear friends. So this have been explained and there is no example and all required here. Directly we will experience this question number 5. So proceeding. All these points I already taught you, explained to you. So this firefighting expenses. I'm not going to write now like why they give firefighting expense and all. That is common sense approach only. Now the basic treatment, my dear friends, firefighting expense, generally firefighting expense will be compensated up to the extent of the salvage value. So generally firefighting expenses compensated up to the extent of salvage value, which means it is not always salvage value will be compensated, my dear friends. It is like actual firefighting expense only will be compensated, but maximum dash value, salvage value, correct? So it should be added in determining loss of stock. Thus, loss of stock equal to stock on date of fire minus salvage value plus firefighting expenses. I hope you understood this. So then, if margin is given on cost, it should be converted in terms of sales. So in the given question it is 33 1/3 percentage. So in fact this is called mixed fraction. Mixed fraction converted into improper fraction. Ayyo sir, it won't come to me, sir. Naturally mathematics I will fear. It's okay. I will directly explain to you, my dear friends, in the problem only. Idella special points relating to this question, my dear friends. Copying frame. I have explained you 5 special points here. If there is if the overall stock is understated or overstated, then it should be brought to the original cost price. If there is some capital expenditures, including the trading account items, not only purchases but also wages, direct expense and all, such capital expenditure should be eliminated. Similarly, my dear friends, goods already gone out, Gone out nali it is already credited as sales, but sir it is not there in sales because it is gone out for some other purpose. Then it should be eliminated. No. How do you eliminate? Separate you credit in trading account. Say advertisement, consignment, it has been sent to so and so person, sale or return. Like that for so many purposes you sent. It is not there in the shop. If it is not there in the shop, it should be eliminated either by deduct from dash purchases or showing the credits. Don't do both. Either you deduct from purchases or show it in the credit side of trading account. Then the fourth one, my dear friends. Fourth one is what? That the firefighting expenses should be considered generally maximum of the salvage value, but my dear friend, policy might have a different restriction also. Maximum of 5,000, maximum of 3,000, like that and all. How do I know? That should be given in the question. So generally firefighting expense given will be compensated, and it is added after computing claim illa before computation of claim along with the loss of stock it should be added, which means even that amount also will be subjected to average clause if it is applicable. I hope you are following this. So that way you should be knowing that particular concept. Then if the margin is given on cost, it should be converted in terms of sales. How to convert, I have already explained to you, my dear friends. Maybe example, gross profit ratio 30% on cost. So what does that understand? 30 by 100 on cost. What is the meaning of this? What is the meaning of this? Meaning is cost price is dash 100. Profit is
30.
Selling price 130. Okay. So my dear friends, what is margin on sales? Profit on sales is equal to it is 30 by 130. Like this fraction is sufficient, right Abba? So suppose for example 2. So gross profit ratio 28 40% on cost means what? 40 by 100 on cost, which is equal to 40 by 140 on sales. Right? Example 3, gross profit ratio. Gross profit ratio. It is given as 25%. Gross profit ratio 25%. About what is that we understand? Which is equal to 25 by 100 on sales. Because I simply mentioned as gross profit ratio 25%. So only if the question specifically states that it is on dash cost, then you need to convert. Otherwise, if it is simply mentioned as ratio, you should understand it is already there on dash sales. If the question simply mentioned gross profit ratio, you should understand it is already given on sales. I hope you are following. So I don't know, either simpler we can't make it, my dear friends. In all forms like I have explained to you. So here there is no. Suppose if it was mentioned on cost, then 25 by 100 on cost, which is equal to 25 by 125 on sales. Sir, here why you didn't took 125? Because it is not separately mentioned as on cost. So which means I will automatically understand it is on sales. Do you understand this? So that is how you should be taking, my dear friends. So previous question, the profit ratio given, so we took it 30% directly on sales. In this question, given it is on cost, you should apply. So now, after hearing this lecture, now you take 10 minutes, you should solve. Step number 1, GPR, dash on cost is equal to dash on sales, number 1. Number 2, memorandum trading account. So take blah 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 items, apply this principle, find out stock on date of fire. Then apply the third one, loss of stock. Loss of stock equal to blah blah blah. Fourth, claim. So you should apply this particular 4 steps, my dear friends. So I am giving you maybe 10 minutes, 12 minutes, you take 12 minutes. So doesn't mean that in this particular video I am going to stand still for 12 minutes. I presume you have already taken 12 minutes, maybe 15 minutes you spend. I don't mind to complete this problem. Stop the video. Stop the video and solve the problem. And so that you have completed applying all these things. Apply your mind. Don't simply waste time. Don't tell I didn't understand. Apply your mind something. Suppose in spite of all these discussions, some students have not understood, no problem. Now, if you apply your mind, then that is the time you are giving work to the brain and it is progressing. If you are not going to try the problem on your own, brain is not progressing. Suppose answer also to this question, you will simply hear only, then your brain is not progressing. Amount spent on the lecture is absolutely waste. Sir is explaining super, I am understanding by hearing your lecture. Waste, I am telling you. Then it is pakka commercials only. I want you to solve the problem. Please solve the problem. If you want to pass CA, I can't make you CA. Please solve the problem. Welcome after the 12 minutes. So maybe you would have stopped the video. So proceeding. Solution now. Question number 5 or a solution. Step number 1 is gross profit ratio. As far as gross profit ratio is concerned, it is given 33 1/3% on cost. Now you should know other aspects like how this fraction should be simplified. 3 into 33, 99 plus 100. So this is 100/3% on cost, which is equal to percentage nale denominator is what? 100. So thereby it is 100/300. Already 3 is there in the denominator. Now 100 also come to the denominator. So thereby 100/300 on cost. That is 1/3, which is equal to 1/4 on sales. Maybe if you want to convert into percentage, multiply by 100, you will get 25%. So I don't want to express that, that's all. I hope you are following this. So that way you should be understanding my difference. So 33 1/3% on cost. So we converted 3 into 33, 99 plus 100/3%. 100/3%. Again, in terms of percentage, if it is like 60%, 60/100, no, here 100/3% is 100/3, another 100 is also involved, so 100/300 percentage is removed, so 100 comes the denominator. So 100/300 nale the muttai striked off, 0 striked off, so 1/3 is equal to 1/4 on sales. 1/4 on sales. Understood? Sorry, because if I straight away write 33 1/3% is equal to 1/3, like that I can write. But some students know, if they have not come across this mathematics properly, but they are technically very strong in other aspects, logical thinking, maths they are not aware, so they will immediately create shortcuts. What shortcut? 33 1/3, 33 you omit, you take 1/3, and they go for wrong answer. So please you should not do like that. Suppose, my dear friends, suppose it is 16 1/4% on cost. How to convert this? 16 1/4%, 4 into 16, 64. 64 plus 1, 65. So thereby it is 65/400. 4% as 400 on dash cost. So which is equal to 65 by 465 on sales. Because what is the meaning? 400 is dash price, cost price. 65 is what is selling price? 465. So 65 by 465. I hope you understood this. But like this you should be understanding. You should not tell 16 1 by 4. 16 I leave it sir. 1 by 4. 1 by 4 equal to 1 by 5. That's not wrong. Understood? So that way I have taught you like this aspect also, my dear friends. Again, this is only for to tell you this is how you should be doing. Anyway, proceeding. So step number 1, GPR. GPR is what? 1 by 4 on sales. Maybe if you want in terms of percentage, multiply by 100, you will get 25%. Understood? So take it as 1 by 4 on sales. Proceeding to step 2. As well, step 2 is fine. Step 2 is concerned. It is stock on date of hire. Stock on date of hire. As far as stock on date of hire is concerned, my dear friends, it is prepare memorandum trading account. Memorandum trading account. No specific period mentioned, so just memorandum trading account. We'll take one by one information, my dear friends. To opening stock. The question have given opening stock as 29,700 and is also given that it has been valued. The entire opening stock is valued at 10% less than the cost to price. If you take the question, my dear friends, it's been given there that it is 29,700 calculated at 10% less than cost to price, which means it is undervalued or overvalued. It is undervalued. It is already reduced. So which means what? This stock represents 90%. This stock represents 90%. So we need to calculate what is 100%. So 29,700 divided by 90% or by 90 into 100, whichever way you feel like comfortable, you write. So divide by 90 into 100. What is that number? 33,000. 33,000. Then we have, my dear friends, purchases. As far as purchase is concerned, the question has given you purchases 80,000. That includes purchase of plant 5,000 should be eliminated. Similarly, the consumption, which is the drawings by the proprietor, the personal consumption should also be eliminated. Either you can show in the credit side. Sir, can I show drawings in the credit side? Yes, you can. No problem. Can I deduct from purchase? Yes, you can. Which is better? Rendume better. So thereby you can show any of this presentation. Purchases 80,000 minus what was that furniture? Plant. Plant. It is 5,000. Let me also deduct the personal consumption drawings by proprietor. Whether proprietor draw cash or goods, it is called drawings. Anything he takes from business for his own use, it is drawings, which is also 5,000. So thereby the purchase will be 70,000. So that only out of 70,000 we will have stock on date of hire. Because these two know it is not anyway stock on date of hire. So proceeding, my dear friends, we have wages. As far as wages are concerned, it is given as 33,000, includes 500 for the plant. It is not for the trading business, so thereby it should be eliminated. So it is 33,000 minus the installation expenses, installation charges, which is 500. So thereby this is 32,500. So point A over B over C over D over E is firefighting expenses. So let me take up now sales, my dear friends. As the sales is concerned, it is gross and the returns we have. So it is sales. Sales how much? 1,50,000 minus sales returns 10,000. So it is 1,40,000. So we have taken all, my dear friends. So we have now gross profit. It is 1,40,000 into 1 by 4. 1 by 3 on cost, which is equal to 1 by 4 on sale. So we'll just simply multiply by 1 by 4 or 25%, which will give you 35,000. So that you will arrive at buy stock on date of hire. How much is this?
30,500.
So this is 30,500. So it is 30,500. So this is how you will be calculating this amount, my dear friends, 30,500. So proceeding further, my dear friends, it is it is 30,500. Then we will proceed for loss of stock. My dear friends, listen carefully. Loss of stock. Stock on date of hire. How much? 30,500 minus salvage value retained. Total salvage value was 3,000. Returned to insurance company 10% of this 300. Appo 2,700 da retained. What is retained? 2,700. So this, which is a deduction item. Sorry. Next, you also have, my dear friends, firefighting expenses. What is the firefighting expenses here? 2,200 is the firefighting expenses. Is part of claim, should be added. So listen, my dear friends. Which will be how much? 3,500 minus 2,700 plus 2,200.
30,000.
Which is 30,000. In fact, you can add a firefighting expense at the time of claim also, my dear friends, but along with the total loss relating to this fire accident, like that you can calculate this as 30,000. Loss by fire, like that you can take this as 30,000. Now step number 4, which is claim. This is lost or this is my loss. But can I claim 30,000? That depends upon the policy amount. Actual loss suffered will be compensated depending upon policy amount, also depending upon the average clause application. Also it is depending upon average clause application. I hope you are understanding. So here policy amount is how much? Policy amount is rupees 25,000 and is less than stock on date of hire, which is 30,500. So my dear friends, it is one thing we know, it is partial loss, correct apa? Next, average clause is there in the policy. Yes, average clause is mentioned in the policy. How do you know? Because question doesn't say anything. If question doesn't say anything, average clause there or not there? It is there. Third, it is underinsured or overinsured? It is underinsured. So it is underinsured. So thereby, my dear friends, claim is equal to loss into policy amount by stock on date of hire. So which is 30,000 into
25,000 by
30,500.
24,590.
Sir, a student who later on asks like, sir, I don't take 2,200 here, sir. So in that case, I will take the answer here as like 27,800. Later on, like at the time of computing claim, I take 27,800 plus 2,200, it will be 30,000, sir. Doesn't matter, my dear friends. So whether you deduct, whether you add in step 3 or step 4 doesn't matter. I hope you are following. So that way, presentation wise, you can have your own way. So doesn't matter. It is part of claim, that's all. So anyway, you take at the time of step 3 or step 4 doesn't matter, my dear friend. So then this is not merely called as loss of stock, it is called loss by fire. 30,000 will be called as loss by fire, like that you take. If you say loss of stock, it is only like 27,800. Then to get the claim, loss of stock plus firefighting expense, like that you may have to write. So don't give like again significance to this presentation part and all, my dear friends. You can present in any form and accordingly you can arrive at the answer. I hope you are following this. It is 24,590 is the answer. All of you?
Yes, sir.
So spend 1 hour, my dear friends, for this question. So I told you 20 minutes is the time I used to take in a normal lecture. You have spent 1 hour exclusively for this question, for your better understanding at an online platform. Because why I should do all these things? Because even though I spent 20 minutes in a face-to-face lecture, at least I know like some 10 students will come with doubts. So thereby it will be like around 40 minutes. So, but I know all the doubts what student will ask, but I actually wanted the students to ask that particular doubt. But here I don't know how many of you will take the proactive steps to raise doubts. We have doubts clearing platforms, Telegram group, etc. and all. So thereby, in spite of knowing all these doubts student will ask, usually in face-to-face I don't clear those doubts on my own. Student should come, and when the student comes and asks the doubt, I will explain to an entire class. That is how our classes will be, my dear friends. So when a student asks, then I won't discuss with that particular student. Even though student spoke me secretly the doubt, I will make it public and I will share it with the entire class. So that way it used to spend again 45 minutes or so. But here I don't know how many of you proactively ask. So thereby, whatever doubts that normally a student can get, I have explained. In spite of all these things, I am not telling you should not get any more further doubts. You can still get doubts. You can definitely post it to me. I am very much there to help you out, my dear friends. I am not telling this should also you can't understand. Like that I can't tell. But only thing I will tell is that whether you are understanding your entire concept or not, but when your problem is far there to try, you should try, go to the final step. Go to the final answer. You would have committed mistake, no problem. You would not understood, but you know mathematics, you know English. You do something, proceed with the final answer. Let it make mistake. First, dare to face failure. Let failure comes, it's okay. So what is failure? Wrong answer. It's okay. So second time wrong answer. 999 times wrong answer, no problem. So be bold enough to commit mistakes so that you can rectify. Some students know, no, I don't want to make mistake. I don't know. Please make mistake, then only you can refine. Then only brain will progress. So that very bottleneck mind, closed mind, I won't try. Fourth adjustment, I don't know, I won't try. So that sort of attitude you change. Work is given, please try on your own. Your brain should be progressing. I am not telling every person born in this world have same state of brain, same grasping and all. But you can improve, because the way in which we live, our creation, what is given to us, everything is different. I don't know the reason why God created us like that. Maybe some reasons behind, my dear friends, but we can definitely improve by doing that extra work. But if you are going to be closed mind, I won't do unless I know it. Only when I know I will do it, then that's a wrong stand, my dear friends. You should progress applying your mind, because everything is man-made. If you think on your own, you might get the correct answer without even knowing the concept. That sort of attitude you should get. Take a new problem from the study module, solve it on your own. Definitely your brain will improve. Progress, the progression of your brain should happen only if you give workload to the brain. If you are not going to give workload to the brain, everything only sir only should tell, faculty will tell na. Brain is comfort mode, it is hearing. Comfort brain is there. Pain you are not going to give na. It is not going to improve. It's not going to grow. It is in the same state. Everything you are understanding, but your brain did not work. I only worked. I only poured everything. If your brain should work na, you should think, you should apply your mind, solve the problem without me solving the problem. That is why in my class I want you to solve first, then only I will solve. I hope you are understanding. So the copying frame, my dear friends, I think I have given this frame. The explanation frame I gave, I think I have given, maybe if not. First frame, second frame, stop, copy, resume. Okay, solution frame. Stop, copy, resume. Okay, so we'll come to the last question for the day, my dear friends. So it's close to 2.5 hours, so we'll take one more problem here. Yeah, so I've done question number 5. Let's take question number 6 here. Question number 6. Calculate gross profit ratio for the calendar year 2020 in each of the following alternative cases. Actually, I am going to work out only one case A. Here now this is the problem involving how to compute GPR. Step number 1, GPR. That alone we are going to take through question number 6, through different cases. So some special points and all we are having, no. So we'll take this case A, my dear friends. Opening stock 5,76,000. So we are supposed to find out gross profit ratio for 2020. Which means gross profit ratio we are finding out now. It is previous year or year of fire. It is not year of fire. It is previous year because we find GPR not for the year of fire. It is for the previous year from which only we take for the current year. Correct? Sorry. Upon step number 1. Opening stock 5,76,000. Purchases 37,52,000. Wages 4 lakhs. Sales 46,40,000. Closing stock 9,68,000. Stock at the end of each year and till the end of calendar year 2019 had been valued at cost less 10%. Up to 2019, their policy was to value the stock at cost less 10%. From 2020, however, there was a change in the valuation of closing stock which was ascertained by adding 10% to its cost. This is something they have already done. They are not asking you to do. They have already done. What they have done, they have been valuing less by 10% till 2019 and they have been valuing more by 10% from 2020. In June 2020, goods costing 2 lakhs. Other undervaluation, overvaluation are there. Goods costing 2 lakhs were consigned but lost in an accident against which the insurance company paid only 40% is what information given, my dear friends. Let's proceed here. The question is primarily to find out what? The gross profit ratio. It is the gross profit ratio. Let's find out this particular gross profit ratio, my dear friends. So, question number 6, case A. First, I will give you 2 minutes time. You prepare, there is no 4 steps and all. You need to prepare a trading account. For which year? 2020. And you should take all the information and you should find out the gross profit ratio. I am giving you 2 minutes time. Stop the video for 2 minutes and then resume the video. Welcome after 2 minutes. Okay, so proceeding, my dear friends. So we are taking trading account for the year 2020. Trading account for the year 2020. So it is my dear friends, so we have opening stock. Opening stock. It's been given that opening stock is what? Stock of 19 or 20 ana. It is actually closing stock of 2019. So when we say writing 2020 and we say opening stock na, it is stock of 19 or 20 ana 2019 oda stock. Adile carry forward stock. Appo which principle would have applied? 19 oda principle was applied. What was the 19 principle? Undervaluation or overvaluation? Undervaluation. They were valuing less by 10%. Correct? What is the amount given? 5,76,000. This 5,76,000 is already reduced by 10%. Means it represents how much? It represents 90. You should not simply add 10%. It represents 90. You should find out what is 100. So it comes to 6,40,000. 6,40,000. Then we take purchases. What is the purchase amount? Purchases. It is given as 37,52,000. 37,52,000. Then we have, my dear friends, it is wages given. Wages. What is the wages amount? 4 lakhs. Then we have sales. What is the sales amount given?
46,40,000.
46,40,000. I have told you, my dear friends, if the goods have gone out of the entity and if it is not sales, it should be eliminated from this stock. It should be eliminated from the trading account. What had happened is they have consigned goods. Actually, the term consigned means it is not necessarily consignment transaction. The term word consigned means goods has been sent. Goods has been sent. So, you can take it as consigned goods as goods sent on consignment or goods sent. That is what we can take, my dear friends. How much abdina? 2 lakhs. And it is destroyed, it is lost in an accident, insurance company gave 40%. Those things actually doesn't affect trading account. So, please listen carefully, my dear friends. When there is some abnormal loss have happened, that entire goods gets eliminated from the trading account. Entire goods gets eliminated from the trading account. Then, in the 2 lakhs, 40% will be given by whom? Insurance company. So, that will be taken as insurance company receivable in the balance sheet. And 1,20,000 is our loss. The 2 lakhs may loss, 120 loss, 80,000 loss. 120 the loss, and the 120 will come in P&L. Anyway, that has got nothing to do with our topic because we are not presenting trading and P&L account. We are presenting only what account? Trading account. So, from as far as trading viewpoint, goods gone out. Even if it is not destroyed also, I would have credited here. Correct? So, thereby please understand, see, even if it is not lost in an accident, but it has been sent to consignee, I would have credited this amount because I want to eliminate this from trading account because this stock is not there in the shop when the fire accident took place. Correct? Yes. So, thereby please understand, my dear friends. Sir, last 120, I should write 120 here, insurance here. See, it's not a question of abnormal loss or not. Goods gone out of the entity, it should be removed either by deducting from purchases or by crediting in the trading account. So, accordingly, you take that particular 2 lakhs. Here, some students asking, by seeing different books, books it has been given, loss 120, insurance 80, like the 2 lakhs is there. Effect remains the same, but that is actually not part of trading account. As far as trading is concerned, 2 lakhs goods sent. Even if it is not, I am telling a scenario, suppose this abnormal also, insurance not given also, will I make this 2 lakhs entry here? Yes, I would have done. Because it is not there in the shop. It is there, this purchased goods, no pa. A purchased goods already sent out, it is not there on the date of fire. So, if I don't deduct this, then it will automatically arrive in the balancing figure. Correct? So, thereby it is not a question of loss or not, and the goods has been not there in the shop. That is a note, already I have given a note. That is why I am not writing here. Once the goods have been already gone out of the business, then it should be eliminated from the trading account either by reducing from purchases or by crediting in the trading account. Understood? Sir, now you will arrive gross profit as balancing figure. So, we will arrive gross profit as balancing figure. What is the gross profit amount? 4640 plus 2 lakhs 4840 minus these amounts. We have not taken closing stock. I am sorry. Closing stock. Closing stock, my dear friends, is given in the question as 9,68,000 and is given as closing stock 2020 or closing stock. Sir, usually we are a closing stock as balancing figure. No, my dear friends, here closing stock is actually, we are not preparing trading account of 2020, fire period, we are preparing trading account of previous year. So on that basis, closing stock is given. So 9,68,000 represents the overstated price. So this represents how much? 110. So you should find out what is 100. What is 100?
8,80,000.
So it is 8,80,000. Sir, 2 lakhs you said eliminate, then only it will not appear in the closing stock. It is arrived as balancing fee, correct? So the same is applicable for gross profit also, my dear friends. So as far as gross profit is concerned, in the 2 lakhs is there in the cost and the goods is not there for trading account, then it should be eliminated from the trading account in determining the gross profit. So accordingly, you should take these amounts minus these amount, you will be getting gross profit. How much is that?
9,28,000.
9,28,000. In the goods 2 lakhs has been consigned. Are they destroyed or not? Should be eliminated from trading account, whether to find out this closing stock as balancing figure or to find out gross profit as balancing figure, because this amount is there in the cost price. And the cost goods either should be there in sales or should be there in the closing stock. But it is not there in sales or closing stock, then it should be eliminated from the debit, either by deducting here or by showing in the credit side. I hope you are following. So that way 9,28,000 is the balancing figure, my dear friends. So gross profit ratio equal to gross profit by sales into 100, which is 9,28,000 by 46,40,000 into 100, which is 20% is the gross profit ratio. Understood? So maybe you would have taken 5-10 minutes extra today, because the last class I gave you 5-10 minutes early. So thereby you would have taken some additional time. Doesn't matter. So in fact, at your place you would have taken break at a different point of time. But this recording is also planned for a virtual classes, in the sense a time bound scheduled class also we are planning. So naturally maybe 5-10 minutes additional time would have spent, no problem. I will compensate you in the subsequent class also. 5 minutes early and all I can leave you. So a copying frame I am providing here, my dear friends. Yeah. So now we have completed question number 6A. No, please understand, my dear friends. Question number 7 illa. This question number 8. The question number 8 is gifted to you. When I say gift henceforth, I will not solve this problem also. I will give only final answer alone, because question number 8 is nothing but question number 6A and question number 5 order principles will be there, my dear friends. If you read this question, you find that salvage value given, policy amount given, anyway basic information. Purchases, sales, these two information you can say same data of question number 6A. Then purchase and sales of the 2021 figures given, stock and wages information given. If you analyze the data, goods consigned worth rupees 2 lakhs, you know what to be done. Then up to 2019, 10% less. From 2019, there was a increase in the valuation of stock figure. Then purchases include purchase of plant to 5,000, wages include 500 for installation, goods costing 5,000 taken by personal use. All these things covered in question number 5. Question number 5. So this is a combination. Firefighting expense also given. So you should be knowing it. Apply question number 6A, question number 5 together I have given and included in question number 8. Pakka gift to you. I will not even give full-fledged answer. I will give only the final answer alone. In the next class, my dear friends, you should be solving this problem on your own. Okay? Because if you get a feel every question full sir will solve, then you will not solve. So I want you to solve this question. We'll meet in the next class, my dear friend. Thank you. Good day. We'll meet in the next class.